students, we will make a beginning with a new topic, interest, mandatory and penal interest, which are being discussed through sections 234A, 234B, 234C. Of course, this is the one chapter which is of more practical relevance also. That is, after you come to the final, at least by the time you come to your second year of articles, in your office you may be carrying out the tax work. 90% of situations, while preparing that particular return of income, if not 234A interest, you may need to calculate 234B and 234C interest. To tell you about generally what is 234A, 234B, 234C. Point of interest here is, unless government say there is some penal interest, penalty, for you are not doing something which they expect you to do, people will not feel like doing it. Because other way around, we are all the one who generally do the things in the last minute. And that too also, if something going to happen which is going to affect us, we feel like doing it belatedly also. So generally, you find the SSEs making a delay in filing the return of income. Once there is a delay in filing the income tax return, what is the problem for the government? What is the problem for the government? Usually people will look at the TDS and the advance tax that they paid, and they will reduce this TDS and advance tax from the tax payable. But the tax payable, when they are going to ascertain, when they want to file a return, then they will prepare a computation statement and will find out what is a tax payable. From that tax payable, they are going to reduce the TDS and the advance tax. Then they will see how much more is required to be paid. That they will make the payment, and which be termed as a self-assessment tax under section 140A. Let us suppose a lakh rupees is there as a tax payable. You have an advance tax of 30,000 rupees, TDS of 20,000 rupees. So balance tax payable is how much? 50,000 rupees. In case if you are filing your return before the due date, what will happen? Naturally, whatever the self-assessment tax you require to pay, you will be paying it and filing the return. Let us suppose there is a delay in filing the return, means what? Government money to the tune of 50,000 rupees, which you are supposed to pay by way of a self-assessment tax, is held by you. Is the government not a loser? Definitely. Because what is to be paid by the due date for filing the return is not getting paid, and it is getting paid belatedly at the time when they are filing the income tax return. So your 234A interest is what basically? 234A interest is the interest which you are paying when there is a delay in filing the return of income, or when there is no return of income that is filed. This gives rise to a point. What is that particular point? Sir, before the due date, I completely paid the tax. There is no tax obligation. I filed my return belatedly. Is it that I am exposed to this 234A interest? Then the answer for that is, if total tax payable is going to get paid before the due date, and if there is a delay in filing the income tax return, definitely this particular 234A interest you are not entitled. Of course, this is more of a procedure how to compute the 234A interest, we will take up in the due course. As far as your 234B interest is concerned, what is that 234B interest and what is the logic behind it? See, out of these three interests of 234A, 234B, 234C, what I found more penal in nature is 234B. Why? Once we start doing the problems, you will be knowing why 234B is more penal compared to 234A and 234C. See, 234B interest, when you are liable for 234B interest, in case if you are not paying the advance tax, or in case what the advance tax that you paid falls below the 90% of the advance tax obligation which you have, then 234B interest comes into play. And your 234B interest, computation starts from which day? First day of the relevant assessment year. First day of the relevant assessment year till the date of completion of your assessment. This really creates a problem, because your 234A interest will stop by the moment you file your income tax return. Your 234B interest is more penal in nature, because once that advance tax which you paid falls short of 90%, then the interest computation on that shortfall will commence from the first day of the assessment year. Whereas in 234A, the interest calculation comes from which date? From the due date for filing the income tax return. Yes. Now, if I move to the, what is it, 234C. Before that, let me tell you, the calculation of 234B will happen twice or sometimes thrice. How come? At the time when I am paying the self-assessment tax under section 140A, I am calculating the 234B interest from which period to which period? From 1st of the April of the relevant assessment year to the date when I am paying the self-assessment tax under section 140A. Subsequently, what will happen? My assessment gets completed, or an intimation will come under section 143(1). And in that intimation or in that particular assessment, what the assessed tax, if it is going to be more than the returned tax, or assessed income is more than the returned income, again for that extra amount of the tax which I require to pay, again 234B interest is to be computed. That way, you have 2 times, 3 times. Again, if the case is taken for the reassessment under section 147 or block assessment under section 153A, then again one more time I need to calculate the advance tax on that 234B interest. In case if with the reassessment or the block assessment my tax obligation is going to get enhanced, again I have to calculate the 234B interest. That is the reason why I always say 234B interest is more fatter compared to your 234A interest and 234C interest. And your 234C interest, what for 234C interest? That is, law prescribes in case of individual 3 installments, in case of the corporates that is 4 installments, non-corporates it is 3 installment program of paying the advance tax. There is a shortfall in making the payment. Then in respect of that shortfall, you require to pay the interest 3 months, 1 month in case of the individual, and in case of the corporates, what is it? 3 months, 1 month. How to compute anyhow in detail maybe. But my whole lot of interest is more than by hearting. First you should understand the underlying objective. That is most important. What for we are going to calculate this? See, let us suppose my tax obligation is 1 lakh. First installment I need to pay 30%, 30,000. Let us suppose I am paying only 20,000 rupees of the tax. So 10,000 rupees shortfall, that money is there with the SSC for 3 months till such time the next installment comes. So if government money is there with us, we require to pay tax. Of course, the good part is 1% per month I have to pay. That's the reason why you find in many cases business people prefer to pay this particular interest than paying the advance tax. What is their argument? 1% per month means 12% per annum. Isn't it? My OD interest is 14%. So I prefer to save the 2% of the interest and I will come to you and you decide what is the total tax obligation we will pay. We prefer to pay the, what is it, this interest. When you are doing the business with the loans which carry interest more than 10%, people are preferring to pay the interest to the government, which is helping them to withhold the tax money. But of course, like such advices we are not supposed to give. We always should stand by the side of the department and should advise the people to comply with the provisions. Because the whole lot of advance tax concept itself is brought into the law, because people will always prefer to have anything in installments rather than paying in lump sum. If I say there is a scheme for you to make the payment in installments, people prefer to have such installment concept. So let us not defeat that very purpose by which the advance tax concept is being brought in. So that is about 234C interest. Now, as a student, you require to understand how to compute the tax under 234A, 234B, 234C. Probably this class might have make you to feel that 234 ABC interest calculation is a more difficult. But what we are discussing in the classroom is more complex than what you are doing at your office. Because generally at the office level, when you are doing the work, the 234 ABC interest only for one time you are calculating. That is, when the SSC is paying the self-assessment tax, at that time you are asked to calculate. So appears to be so simple. But the next part of computation of your 234A interest, second time when you pay the 234A interest, that is when a notice comes in section 148 requiring the SC to file the return to take up the case for reassessment under section 147, and if there is a delay in filing the return. Similarly, under 153A, if a notice is coming for you to file the income tax return for the block assessment scrutiny, that such assessment, if there is a delay, then also you require to calculate again. But generally you may not be exposed in office level for such computations, but in theory you require to do it. Of course, my own observation with the past examination questions, they are less complicated than the examples which we are going to do in this particular session. So since you are going to get exposed to the higher level problem, doing lower level problem may not be that very difficult. So in that context, let us take up one after the other. So first we will take up the 234A. Write down. Mandatory and penal interest. Mandatory and penal interest under section 234A. Under section 234A. Point number 1. When it is payable, write down. Side heading chargeability. Side heading chargeability. Interest is payable. Interest is payable if A, return of income, ROI, return of income is filed after the due date, specified under section 139(1), specified under section 139(1). Or point number B, ROI is not filed. ROI is not filed. Return of income is not filed. Two things are there. One is, it is not being filed is one concept. Second, it is filed but belatedly, not within the due date. Then, what is the rate of interest? Make the side heading. Rate of interest 1% per month. 1% per month. Simple interest. Simple interest. Then friends, write a small note, that is, part of the month shall be considered. Note, part of the month shall be considered as a full month. As a full month. Let us suppose 5 months, 5 days comes. Then you have to take 6 months. Then, what is the period for which you require to pay the interest? Side heading period. Side heading period. Commencing commencing from the next, commencing from the date next, commencing from the date next, following the date specified under section 139(1). What is that? In case if you are subjected to the tax audit, then it is 30th September. Otherwise, what is the date? Otherwise, what is the due date? 31st July is the due date. If it is not what is it? Tax audit case. Then friends, from that date you have to start. That is from the 1st of the October in case of the tax audit situation. Other than tax audit situation, from the 1st of the August. What is the due date? 31st July. Then to which date? And ends on A. The date of filing, return of income. The date of filing, return of income. Note. In case where ROI is not filed, return of income is not filed, the date of completion of the assessments, up to the date of, in case return of income is not filed, up to the date of completion of assessment, under section 144/147/153A. Because for you to say 143(3), problem comes where 143(3) regular assessment, scrutiny assessment happens only when you file your return. The case which we are discussing is, if a return of income is not filed, your case will be taken up for assessment under the best judgment assessment 144, or a reassessment under section 147, or the block assessment under section 153A. Then, on what amount you are going to calculate this 1% interest right now? Amount on which interest is to be calculated. Make it side heading. Amount on which interest is to be calculated. That is, first, tax determined under section 143(1), or on assessment under section 143(3), that is scrutiny assessment, /144, that is by judgment assessment, /147, reassessment, /153A. From that, what you require to reduce? Less relief of tax, under section 90 comma 98, comma 91. That is all related to the double taxation avoidance and all that. Less MAT credits, less MAT credits, minimum alternate tax, under section 115 JEA, section 115 JEA, less TDS oblique TCS, less TDS oblique TCS, less advance tax, less advance tax, less self-assessment tax, less self-assessment tax, paid on or before the due date, self-assessment tax paid on or before the due date. This is most important. Lesser self-assessment tax paid on or before the due date. So whatever the resultant balance amount that is there, on that you are calculating the 234A interest is about. So in this context, write a small note. What is that particular note? That is in case if a total tax liability is paid before the due date, total tax liability is paid before the due date, and return is filed belatedly, then interest payable under section 234A, is nil. So what should happen, friends? We should always ask the SSCs to, at least if there is a delay in paying the filing the return, let them pay the total tax obligation before the due date so that they can avoid this 234A interest. In my personal opinion, in case if they pay more than what they require to pay, that would be much more comfortable, because we will file the return belatedly and we will ask for the refund. In case if the assessment happens and the tax obligation gets enhanced also, what you have paid extra will help you out in terms of saving the interest. Of course, the argument of the SSCs is that, sir, we will pay the interest. We don't mind paying the interest because after all, interest works out only 12% per annum, whereas we are borrowing at a rate more than 12%. For such kind of arguments, we don't have anything to say. So this is something which you are looking at computation at the time when you are filing your return, at the time when you are paying the self-assessment tax under section 140A. So if that is the case, sir, what you said, tax determined under section 143(1). 143(1) comes into play, or 144 or 143(3) or 147 or 153A comes only after I file my return, after my completion of the assessment. So that means you are saying assessed tax. But at the time when I am filing my return, I will not be knowing what will be my assessed tax. So at the time of filing the return, when you require to calculate the 234A interest, it is always on the returned tax. Subsequently, after the completion of your assessment, you are going to look at the difference between the assessed tax and the returned tax, and on the excess you are going to calculate the, what is it, your interest. On the excess means you will calculate on the assessed tax only. Whatever the interest that you pay under section 234A at the time when you are paying the self-assessment tax, that interest will be adjusted against the actual 234A interest which is to be computed on the assessed tax. So in simple words, you write this particular point. Interest payable under this section, next point, interest payable under this section shall be reduced by interest, if any paid under section 140A or otherwise. 140A or otherwise. This is what I am saying. Generally, you may not be exposed to the calculation of this. Why? Because in your office you are calculating only the 234A interest when the assessee is filing the income tax return. Subsequently, when the assessed tax is more than the returned tax, department itself will make the calculation and send it to your office or to the assessee. Our job is only to check the correctness of that interest calculation. Many times people will feel that what the department calculated appears to be correct, so we are not making the cross checking. But as an auditor, you are not supposed to accept in toto what is as it is, because our job itself starts on the pretext that the other person will make a mistake and we will be checking it and correcting it. Okay, since the department calculated, okay, I will not make a cross check, don't do that. Of course, generally people will do like that because they don't know how to make the cross check, then definitely they are not going to make a cross check. That is the reason why 234A interest or 234ABC interest, even at the examination problems also they gave only at the time of filing the return of income, most of the times. Of course, today you can't predict anything. Don't take my word saying that sir asked us to learn only at the time of filing the return of income how to compute 234ABC interest. Next part of it he says more of practical relevance than examination relevance. No, because what is important in CA exam is what is tested repeatedly and what is not tested at all so far. Right, friends. What are the other points that you need to remember is, write down, for computing the interest, under section 234A, tax means income tax, including surcharge and educational cess. Surcharge and educational cess. One more important point. Let us suppose this income tax, surcharge and educational cess comes in figures like 21,199 or 21,101 or 21,150. What they said is round it off to the nearest 100. The tax, for the purpose of calculation of this particular interest, you round up the tax, not the income. You round up the tax to the nearest 100, and on that you For computing the interest under section 234A, income tax shall be rounded off to nearest 100. Income tax shall be rounded off to the nearest 100. Any fraction of the 100 shall be ignored. Friends, try to understand. If it is 21,199, you know what is the nearest 100? 21,100. If it is 21,101, what is the nearest 100? 21,100. The doubt may arise in your mind. If it is 21,150, what is the nearest 100? It is not 21,100. It is 21. It is not 21,200. It is 21,100 only. Only when it is 51, you have to take to the, what is it, 21,200. Benefit must be given to the SSC only. Okay. Now, in this context, let us first solve some problems based on 234A so that we move to the 234B subsequently. So, write down the first problem. That is the return of income. For the assessment year 2010-2011 of AR and Company, a firm which was due on 30th-9-2010 was filed on 5/2/2011. 5/2/2011. Declaring an income of rupees 2 lakhs. Next, it is assessed under section 143.3 on 8/7/2011 at rupees 2,40,000. Next, the SSC had paid rupees 46,000 as advance tax and rupees 10,300 was tax deducted at the source. Compute how much tax and interest under section 234A is payable at the at the time of self-assessment, at the time of self-assessment. Next, also compute further interest payable under section 234A on completion of assessment, on completion of the assessment. Which was done on 8/7/2011. 8/7/2011. Next, the tax and interest required to be deposited under section 140A, was duly deposited on 5/2/2011. On 5/2/2011. So friends, here we have a computation of interest under 234A twice. One at the time of self-assessment, second at the time of completion of the assessment. So the two workings we will do. How do we do? Write down. Interest required to be paid. Under section 234A1. 234A1. First, income as per the return. Because at the time of self-assessment tax, what is the information that is available to you is only the income as per the return, not the assessed tax. First, income as per the return. How much? 2 lakhs. And it is a partnership firm, so it is subjected to what rate of tax? 30% plus educational cess and secondary higher educational cess. 3% or 30% means 30, totally it works out to be 30.9%. So tax on rupees 2 lakhs. Next, tax on rupees 2 lakhs. Yet 30.9%. So take your calculator and do it. 2 lakhs into 30.9%, 61,800. Those who are listening the e-video, if you don't have the calculator in your hand, pause it and first get the calculator. Unless you start working, you will not be able to feel it. Then less TDS 10,300, less advance tax 46,000. So what is the balance, friends? 5,000 balance tax payable on self-assessment, payable on self-assessment is 5,500. Now you know the amount on which you have to calculate the 234A interest. Then you should know what is the period. Let us suppose this is a case wherein tax audit requirement is there. Then the due date for filing the return will be what, friends? 30th/9/2010. Isn't it or not? For the assessment year 2010 and 11, the due date is 30th/9/2010. So the period should commence from which date? 1/10/2010 to the date when you are paying the self-assessment tax. What is the date when you are paying the self-assessment tax? 5/2/2011. 5/2/2011 you are depositing your self-assessment tax. So write down, that is interest under section 234A from 1/10/2010 to 5/2/2011. 5/2/2011. How many months, friends? That is 10th month, 11th month, 12th month, 1st month, and in the 2nd month, how many days? 6 days. Okay. Because it is being done on 5/2/2011. Right. Or 5 days. Whatever it is. Even if it is a fractional month, you have to take the, what is it, as a complete month. So that makes to 5 months. So from 1/10/2010 to 5/2/2011, 4 months plus 6 days. Because 6 days, then you write that is 5 months. That is 5 months on rupees 5,500. On rupees 5,500. So how you will calculate 5,500? Write down 5,500. Then you write down so that at a later date you will not get confusion. 5,500 into 1% into 5. That will now works out to how much, friends? 5,500 into 1/100 into 5. It works out to be 275 days. Up to this, there is no much of a complication. This is what you are all doing in your office also. This is not a big task. Now the task comes when you require to calculate a 234A interest, when your regular assessment gets completed under section 143.3 or best judgment under 144 or an intimation is coming to you under 143.1 or reassessment under section 147 or block assessment under section 153A, when you get that and your assessed tax is more than the returned tax, then you require to again compute 234A interest. From which date to which date? From the date next following the due date till the date of that particular assessment. And whatever the interest that comes against that interest, whatever the interest that now you are paying 275 will be reduced disappointment. So love to learn that calculation. Right now, next. Interest payable. Next. Interest payable under section 234A1. Under section 234A1, as per the demand under section 143.3, as per the demand under section 143.3, that is after completion of your assessment, regular assessment, they are going to send a demand. So for that, how do you go about? Income assessed income assessed. How much is the income assessed? 2,40,000. 2,40,000. Then tax on rupees 2,40,000. Tax on rupees 2,40,000 at the rate of 30.9%. At the rate of 30.9%. How much it works out, friends? 74,160. Less TDS 10,300. Less advance tax 46,000. So balance is what? Tax payable. Balance is the tax payable. What is a tax payable, friends? 17,860. But when it is 17,860, we need to calculate the amount on how much. You are asked to do it to the nearest 100. Of course, here one important point that you should remember is that this nearest interest is coming to the lower end 100. It is not like what we have discussed earlier as upper end interest. It's a lower end interest only. That is, whether it is 21,199 or 21,101 or 21,150, you are taking 21,100 only, right? Not like if it is 21,152, you have to go to 21,200, or if it is 21,199, you have to go to the 21,200. Is not the point. 21,100. This is one important thing, and collection you require to look into. Write down, friends. On what you have calculated the interest? Even when it is 17,860, you have to calculate on what? 17,800 only. Unlike our general understanding, if it crosses 50, you have to take to that 100. But under the income tax law, it is the lower 100 only. We have to consider is what is required to be remembered forever. What is it? In a normal situation, nearest 100 means you have to take the upper 100, whereas in the income tax, it is the lower 100 you have to take. So on 17,800 you have to calculate. What is the amount on which 234A is to be computed, friends? On 17,800. Now the question is, what is the period? Write down. That is for 5 months. For 5 months. That is from 1/10/2010 to from 1/10/2010 to 5/2/2011. 5/2/2011. That is 5 months. So computation is 17,800 into 1% into 5. So that and all works out to be how much, friends? 890. Already earlier how much you have paid? Through self-assessment you have paid how much? 275. That is to be reduced. Less interest already paid. Less interest already paid. Under section 140A. Interest already paid under section 140A. 275. So balance interest payable is 650. That is the reason why I always say 234A interest is less factor compared to your 234B interest. Because 234A interest कितने बार भी आप calculate कर दो, only for the 5 months only you are going to calculate. What 5 months? From the date next to following the due date of filing the return till the date you file your return of income. First time you will pay at the time when you are calculating the self-assessment tax. Next time when the demand comes after completion of the regular assessment. And if you are not fortunate and your case is taken up for reassessment under section 147 or 153A, and because of that your assessment tax is getting enhanced means, then also the computation part of 234A on the assessment tax will be calculated for how many months? Only for that 5 months. Whereas your 234B interest, why I am saying it is fatal? Because it is to be computed from the first day of the assessment year till the date of the assessment. So, as there is more undisclosed income, the obligation under 234B runs so much. Whereas your 234A interest which you are paying is for what? Delay in paying the return. So it gets stopped by the time you pay your return of income. Got the point? See, even if you file your return of income with 1 rupee, subsequently after 2 years or 3 years or 6 years, your assessed tax happens to be 10 lakhs. On that 10 lakhs, you are required to calculate the what is it 234A interest only for what period? From the first day, from the day following the day due date for filing the return till the date you file your return of income. Because the period cannot extend beyond that. Because the moment you file your return of income, whether that returned income is less or more or equal to the period for which you require to calculate 234A interest, whether it is at the time of paying the self-assessment tax or at the time when you receive the demand notice, the period will always be only that particular delay period only, not extended till the date of assessment. Whereas 234B interest will extend till the date of the assessment. So this is one most important